But how will all of this impact the Indian markets? We'll have our team of researchers from CNBC TV18 joining in, who will tell you all about the trade setup and the stocks that we need to watch out for in today's session. First up, Vivek joins in to give us all the market cues this morning. Good morning, Vivek. What do you have for us?
Well, good morning. Finally, after so many days of very weak overnight cues, today we have a session where there has been a bit of a relief rally in equity markets worldwide, and on the back of that, we are taking slightly positive cues into our own trading session today. Yesterday, U.S. markets managed to bounce back from, after turning negative for 2023. The Nasdaq was the top outperformer, gaining over 1.5%. Oil prices yesterday also saw quite a bit of a sell-off. So what actually happened was that Brent futures fell over 5.5%, now hovering around the $85.5 a barrel mark. But talking about the Indian markets yesterday, the opening was in tandem with the global markets. Very weak opening, saw significant sell-off, gave up crucial levels of 19,500 as well. In the second half of the trading session, there was a bit of a pullback rally, and that is something that market participants will take a little bit of hope from going into today's trading session. However, in yesterday's trading session, the story was that the mid-cap and the small-cap stocks actually bore the pressure and the brunt of the selling pressure, both of them underperforming significantly. Banks traded mixed in yesterday's trading session. HDFC Bank outperformed, Axis Bank underperformed significantly, and the NBFC Bank, entire NBFC Bank, saw significant selling pressure. Now, some events to keep an eye out for in today's trading session. The S&P Services PMI is due today. Asian markets indicating a mild rally, and GIFT Nifty 2 is indicating a positive start for our own markets today.
Absolutely. Thanks for that, Vivek. The Nifty Bank will be the one to watch out for, because on a day when HDFC Bank was up 2%, the Nifty Bank was down nearly 500 points. But now over to Surbhi, who would list out the stocks to watch out for in today's session. Morning, Surbhi. Business updates continue on the fly. What do you have for us this morning?
That's right. Business updates continue. First one on my radar is Marico. It's a mixed bag. There's soft top line, but the margins are strong. Demand trends largely mirrored in what was in Q1. That's what the company said. And the domestic revenues were lower. Volumes grew in low single digits. RBL Bank, the total deposits were up 13% on a year-on-year basis. CASA was up 12%. L&T Finance Holdings retail disbursements were up 32% in Q2, and the retail book was up 33%. PNB, the total deposits were up nearly 10%, and the CASA was up 3% on a year-on-year basis. Bandhan Bank, the loans and advances were up 4%, and the total deposits were up 3%. IEX released their September business update. They said the September total electricity volume was up 13%, and the market clearing prices were up 11%. And lastly, Indus Towers will also be on our radar. ET report suggests that the company has told the telecom regulator that it may restrict services to Vodafone Idea, and they will explore legal remedies to speed up the recovery of the receivables as well.
We'll keep an eye out for all of these stocks. Thanks a lot, Surbhi. And speaking of Vodafone Idea, that's the stock that we'll keep an eye out for specifically, because CNBC TV18 actually sent queries to Vodafone Idea, and they had actually denied making any delayed payments for the month of both July and August. But now up to the F&O queues now. Nigel D'Souza is here with us as always. Nigel, good morning. You had highlighted 19,450 yesterday as the key support level. We are exactly there. What do you have for us today? Is a rebound in store?
Well, that's right. Hormuz, it's good to get things right? I said that 19,450, the bulls will be happy if we end around those levels. And that's precisely what happened. What they'll be happier with is what's happened overnight. I was listening to the cues that you were laying out. Yields are lower. You have crude oil prices that have cooled off, and the dollar index a little bit weaker as well. And guess what? The GIFT 50 is not suggesting that we're going to see a big gap up. I think that's good, because it gives the bulls a chance to get in. What transpired yesterday, though? You had the premium on the Nifty futures that came down. Remember, a few sessions ago, it was more than 70. That's come down to around 25, 30 points odd. And yesterday, it was clear that the Nifty Bank came in for some special shorting, because the open interest build up on the Nifty after ending lower by close to 100 points was only around 3%. But on the Nifty Bank, there was a 30% open interest build up. And if you just tie it in what the FIs are doing, well, yesterday as well, they added close to 15,000 short contracts in the ratio of 2 shorts for every 1 long position. And now the short positioning is at around 75% approximately. I'll tell you what, this is not such a bad thing when you have a net short market, because some bit of good news could be forced, the FIs to cover out some of the short positioning. Just take a look at that. A few sessions ago, the net short positions were only around 20,000 contracts. That's moved to around 92,000 contracts. In the month of April, we saw these contracts, the net short positioning, go to around 1 lakh contracts, and from there, we did see a bit bounce. So just keep an eye out. When the FIs get over bearish, That's what could be the trigger that the bulls are looking for. Then yesterday, 19,400 put as well as the 19,450 call, well, they were fairly active in trade. So let's get straight to the levels then. Yesterday's low becomes very, very important. That's around 19,330. Resistance, though, comes in at around 19,510. I say this because there was writing in 19,450 call. And the other level that we're looking at is the 50 DMA. So the first resistance and the second resistance comes up for you on the screen. The sense you get today is if you get a bit of a dip, you'll need to get in and you need to back yourself. Keep your stop losses in place and let's see how that goes. Back to you.
Keep your stop losses in place. That's the motto always, as is Nigel. Thank you so much for joining in. Let's slip into a break. Up next, the GST Council is likely to deliberate on a proposal to levy 18% GST on corporate guarantee extended by holding companies or subsidiaries. More on that on the other side.